Frequently asked questions about the tax-free cash growth warehouse strategy. Brought to you by SCFSIC. Is infinite banking, the tax-free cash growth warehouse strategy, for you? Of course, since my wife and I have been practicing the TFCGW strategy for some years now, and have worked with people who have employed the strategy in all areas of finance, my immediate response is, hell yes. But I have to admit, that may be a little bit of a knee-jerk response. Really though, who would say no to, would you like to be able to double your money without having to work any harder? Would you like your money to grow tax-free? Would you like to generate tax-free retirement income? Would you like to be able to finance anything without having to pay any interest or finance fees? Would you like your savings to be completely protected from any kind of loss or attachments?
I just can't imagine anyone saying no to any of those questions. Can you?
No. On the other hand, full disclosure here, you do have to have some money or some income or some access to some money in order for this to work. You must be able to fund the account. And then you need to be reasonable and have a measure of self-control.
So if you have an income or money you can use to fund an account to get it going, and you are reasonable when it comes to finances and spending, and have at least a modicum of self-control, you can and should be using the infinite banking TFCGW strategy to your greatest advantage.
Undoubtedly, there is somewhat of a learning curve involved, but that's why we make ourselves available to coach our clients, and why I wrote the books about the strategy and how to use it. It's not rocket science. It's really quite simple and easy to practice. Now, let me clarify what I mean by saying double your money without having to work any harder. It's not that if you have $1,000, you can just snap your fingers and magically you have $2,000. But if you have $1,000 or any amount of money in your TFCGW account, you can leverage that money to finance or buy something. And that's $1,000 of value right there.
And still have that $1,000 in your account earning your compounding interest, and that's over $1,000 of value there.
So yes, double the value of your money, and then some. What about grow your money tax-free? Yes, all the money in your TFCGW account grows, and legally we need to say deferred, but in practice, the gains are never taxed, even when used with the TFCGW strategy.
What about being able to leverage the money to finance or buy things without interest or finance fees?
Yeah, right. Well, leveraging your account does, on paper, incur a small bit of simple interest. The dividend interest that is paid to your account is greater than the interest charged, and it's compounding. So the actual result is that you have use of the money without interest or fees. Just the amount of interest that your money is earning is temporarily reduced, but you're still growing your money more than the interest being charged. So virtually no interest, no fees.
And the fact is that all the money in your TFCGW account is completely off limits to any and everyone except you. So if you should be the subject of a lawsuit for any reason, this account cannot be touched. If you should declare bankruptcy, the money is in this account cannot be attached. Even the IRS can't touch it. So yes, your TFCGW account is completely protected. Only you can touch it.
So, what about the requirement of being reasonable and having some self-control? Well, money is a funny thing. if you don't have reasonable expectations or don't consider the consequences of your actions, you could find yourself on the losing end of the deal.
Also, we recommend that you view this financial management endeavor as if it were a business. Nash refers to it as becoming your own banker and prescribes that you treat the whole process as if you are the owner of a bank.
And that you are the sole customer of the bank. That is, have a specific goal in mind when you leverage your account to buy something. And have a plan to repay the bank. And keep to your plan.
Now, we like to think of it as part of a whole cash flow balance sheet for the family business.
And it's not that you have to have an actual business, although that is actually an advantage if you do have some kind of business for tax deductions. But we found that if you manage your household finances as if your household were a business, employing basic cash flow principles helps you to keep the whole tax-free cash growth warehouse a healthy, positive force for good in your financial outcomes. I really like the whole family company idea that is outlined in the book, What Would the Rockefellers Do? Even if you are the only one involved, you can set up the basic plan for the family company.
It's about setting goals, writing proposals for what you are going to use the money for, planning to repay the company bank, basically being responsible.
So, is infinite banking and the tax-free cash growth warehouse strategy for you? Well, here's what I suggest. Watch our free 60-minute webinar, How to Become Master of Your Financial World. The link is in the description box right below here. When you understand all the advantages and what's involved, you can make an informed decision whether or not the TFCGW really is for you. If you have questions, and you probably will, we can help. You can post your comments and questions here, or if you watch the webinar, you'll be on our website, and you can shoot us an email or give us a call. All of our contact info is right there for you.
And if you like what you're learning here, please subscribe to this channel and you'll be notified of new content as it's posted.
So for now, aloha and mahalo for watching.